Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering using a durable power of attorney for tax matters in circumstances where a taxpayer may be incompetent or incapacitated. We'll be covering this topic along with handling client death and dementia issues at Spiedel's post-tax season update and review webinar. You can see a full list of topics covered and get registered at spiedel.com under webinars. Unfortunately, more and more of us have parents, grandparents, spouses, and siblings who have dementia. It's hard just helping them get through the day, let alone trying to get through other challenging tasks like filing tax returns on their behalf. But as difficult as it is, a person's dementia or other mental illness does not relieve a spouse or other relative from obtaining legal authorization to file on their loved one's behalf. Generally, a taxpayer is required to sign Form 2848, Power of Attorney and Declaration of Representative, to allow someone to represent them in a tax matter with the IRS. However, taxpayers can use a durable power of attorney to overcome a legally incompetent taxpayer's inability to complete Form 2848 in tax matters. Durable powers of attorney created for estate planning or other purposes give taxpayers a designated agent or attorney-in-fact the authority to make healthcare and financial decisions when the taxpayer is incompetent or incapacitated and not in a position to execute Form 2848. Durable powers of attorney usually do not authorize representation before the IRS because this is not their primary purpose. But if the information that's presented on Form 2848 is included in a durable power of attorney, then it may authorize the attorney-in-fact to represent the taxpayer before the IRS. Specifically, the information required includes the taxpayer's name, mailing address, and social security number, name and mailing address of the appointed representative, a clear expression of the taxpayer's intent concerning the scope and authority granted to the representative, and a description of the matter or matters for which the representation is authorized, including the type of tax involved, the federal tax form number involved, and the specific year or years involved. The appointed representative is also required to meet the practice requirements specified by Circular 230, Sections 10.2 and 10.7c. A valid, durable power of attorney that includes the information above will only be accepted by the IRS if a completed Form 2848 is also submitted with Part 2 of the form completed and signed by the appointed representative. While the durable power of attorney needs to include a description of the matter for which the taxpayer will be represented, the IRS recognizes that taxpayers cannot predict when future audits may occur. Therefore, a broad, durable power of attorney simply stating that the attorney-in-fact is authorized to represent the principal in federal tax matters is acceptable to the IRS to give the attorney-in-fact the authority to execute Form 2848 on behalf of the taxpayer. Whereas an existing Form 2848 is typically voided when the individual who granted the authority becomes incompetent or incapacitated, a durable power of attorney remains operative or becomes effective when the individual becomes incompetent or unable to act on their own behalf. According to the IRS, the durable power of attorney has to be created before the physical or mental incompetency. Spiedel's Federal Tax Letter is a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can see subscription information and download a sample issue at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.